everyone, and welcome to The Hash, your daily beat on crypto and culture. My name is Naomi Brockwell, and on the show today, we have Zack, Seward, David Morris, Jen Sanasie, and Ben Powers. Welcome to the show, everyone. And to start us off, Zack, I'm going to throw to you. You're going to be talking about some big funding rounds right now.
Big, giant numbers that dwarfed all the other numbers. FTX raised $900 million in a Series B announced yesterday, valuing the crypto exchange at $18 billion. That's just crazy. The previous record holder by most accounts for the largest crypto raise was $440 million by Circle earlier this year. So doubling that, quite impressive. Sam Bankman-Fried's FTX crypto trading empire continues to grow. And the thing that stands out to me here is that investors clearly think there's another Coinbase in the making out here, right? There's room for another big centralized exchange to serve the market, and Coinbase is not going to be the only one to do it. So we're seeing that now in this funding round, people putting some serious money behind their conviction that this company could be extremely valuable one day. I'm going to throw this to Ben off the top. Why are these numbers so big? They just make all the other stuff look so small. Why? What? What's the secret? What's the secret?
They definitely do. Like when I see like funding rounds like 20 million tops for like privacy tech or something, I get real excited. Even like 6 million. But obviously, this is what people are interested in from the VC perspective. This is what they want to raise money on. I think that they saw what Coinbase did. They're interested in it. But at the same time, I think you can't discount this not only from like the volume at which they're trading, which is obviously a lot, but all of the high profile connections that SBF has been developing. Right, like the Miami Heat, Tom Brady, like all these other people. Like he's been out, he's been in public, he's been talking, and really kind of, I think, ease, any investors' sort of qualms or minds, just showing like how he thinks about this issue and also the prospect of where this could go. Obviously FTX, I believe, just recently started looking at a US kind of branch in some ways. Fact check me on that if I'm wrong. But, right now, I think there's a lot of expansion potential, and obviously VCs think the same, but it also points to like these huge funding rounds that we've been seeing in what is like supposedly a downturn in the market. So again, I think that's always interesting to point out when we're talking about this, because this is acting differently than kind of previous behaviors during what some will call a bear market.
Yeah, for sure. So there is FTX US that serves US customers, and then FTX based out of Hong Kong, or most of the staff is based out of Hong Kong, serves global markets. Really interesting to see, and sort of suggests, I think the thing between the lines that I'm interested in is sort of, it's always been a two-horse race between Coinbase and Binance. And given Binance's recent regulatory trouble, I think investors are betting that maybe FTX becomes the second horse in that race, and only time will tell. But it seems to be that some folks are placing their bets on centralized exchanges in the hands of Sam Bankman-Fried. I did want to talk to David about the sort of regulatory angle here. I know you were kind of curious about where they fit in amid this sort of global ramp up in regulatory awareness. What's your thought on that?
Nuanced on FTX, but they are really equivalent to Binance in the sense that they're domiciled internationally. At least at a point, they were headquartered in Hong Kong. I'm not sure if that's still true. And they don't officially serve U.S. clients because they're not regulated in the same way Coinbase is. I guess my main takeaway from that is just that Coinbase has obviously shown that being regulated has a huge amount of value in the equities market, because their valuation was $83 billion. Obviously, they're more evolved, but that does seem like a notable factor in that divergence. The other thing I would point out while I have the mic is that the cash element of this seems almost as notable to me as the valuation. 900 million on 18 billion. I don't have stats or anything to cite, but that's a lot based on that valuation. Just for comparison, Robinhood is gearing up for its IPO, and they're looking to raise, I think, about 2 billion from the public on a 33 billion valuation. Or I'm sorry, I messed that up. They completed their IPO and raised about 2 billion, I think. So usually that proportion is smaller earlier in the VC process. So it seems notable that there's that much cash involved here as well.
Yeah. I'll throw it Jen, but a quick note on that. Just quick note on Sam Bankman-Fried being coy on the public listing front. No imminent plans there, but they are prepared and ready in case they decide to go for it. So should that be the next development with FTX, could be quite interesting. But Jen, take it.
Yeah. So $900 million. The story said they're going to focus on new products. Is there any indication as to where they're going next? I mean, I feel like FTX made a big splash in the sports world. They've invested a lot in sponsorship deals and advertising. And is there any indication as to what they're going to spend this money on?
Global domination, growth, and expanding their presence. I think
Taking
that's pretty
over
much it.
the world.
Yeah, it's interesting to see, FTX US especially is still a relatively small piece of the pie when it comes to exchange volume. So they've clearly been investing in getting that name out there. And it'll be interesting to see if further investments follow this mega infusion of capital. But we will leave it there. It's going to be interesting. Let's switch gears. Who's taking it?
Switching gears, I'm going. We're going to talk about what's going on in New Jersey at the moment. So the crypto lending platform BlockFi apparently just received an order from New Jersey's acting attorney general to halt its interest account operations in the US state. Super interesting stuff. We had the CEO, Zack response. He said that the platform remains fully operational to all existing clients in New Jersey, but it is interesting that New Jersey is starting to crack down here. Prince also responded that he thinks the attorney general is not understanding the situation correctly. He says they're not, offering securities, etc. So just kind of an interesting thing to dig into as we start to see more regulatory crackdowns around the country and around the world. I'm going to throw this to you, Ben. What were your thoughts on this, and what do you think the future of platforms like BlockFi have in the United States if we continue to see crackdowns like this?
Yeah, I think that's interesting because part of what these interest accounts are based on, right, is Bitcoin and Ethereum, which are considered commodities, right? That's kind of what they're qualified as, but also things like Uniswap and Chainlink. And that's where it gets really tricky. I think that's what New Jersey's kind of looking at in this regard. But I also think this is maybe a little bit of a cautionary tale, right? We were talking about Binance, and some of the scrutiny they're facing. BlockFi has also been raising a ton of money, right? And so this is another story here where you see regulators, they're based in New Jersey, potentially start to clamp down on this. So I'm really curious to see which way this is going to go, and particularly if states or places are headquartered start to kind of look at these things differently than maybe the federal government is. I think that can make a big difference because obviously it's 50 states. There are 50 different localized sort of federated governments here that these entities have to deal with. So that's one thing. And the second thing is just that, it should be clear that while current, kind of interest account users can keep their accounts, starting tomorrow, they won't be able to accept any new users. So that's going to be something that could affect their growth going forward, depending on how this all shakes out. But super, super interesting stuff.
Yeah.
They won't be able to accept any new users in New Jersey, right?
New Jersey, correct. Yeah. This is the first state to look into this. They're really focusing on the BlockFi interest account, BIA, saying that is a security. People are earning interest. This is a financial product that we consider to be a security. I mean, I think this stuff is all going to get hashed out in court at the end of the day. We're going to have to get clarity somewhere. It's certainly not coming from the SEC as to what's actually a security. So hopefully, we will get clarity somewhere. It's just a shame that, we have companies that are providing obviously valuable services get shut down in the interim, not knowing whether they're in, the right or the wrong. It's this very gray area. David, I think I saw your hand go up. Is that correct?
Yeah, I just really want to drive home how, really kind of a big reach, or at least a new legal logic seems to be implied by the claims being made here. Because as Ben mentioned, they're really focused on these interest-bearing accounts. BlockFi acts to a certain degree like a bank. In the write-up by New Jersey, they point out the big difference between standard interest-bearing accounts in banks today, which are 0.25%, and the interest being offered by BlockFi accounts, which can go up to 7.5 or 8%. And the implication seems to be that somehow offering high enough interest turns your bank account into a security. And it just on the face of it, it makes almost no sense. And a court who bought this argument would by extension, in some sense, be saying that all bank accounts are securities. So I just really there's probably layers of this that I'm not tuned into yet, but on the face of it, it's a very strange set of claims. And yes, I think Ben hit the nail on the head that the involvement of Uniswap and some of these other assets in these accounts is probably what they're going for. I think they're going to make a sort of complicated argument that the nature of the account makes it different from a bank account, but it's a strange set of claims. But Ben, you wanted to chime in.
Yeah, I think a key differentiator there is that this company is not a bank, right? They're not FDIC insured. They have this disclaimer there, but like if they lose your money through like a hack or like a technical thing, like they're not on the hook for it. And so that's a big difference when we're talking about like savings accounts or interest accounts or anything like this, right? So that's like another part of this argument that New Jersey's making is saying like, hey, like they are not actually a bank in this regard. But Naomi, over to you.
Yeah, I mean, on that point, I would say it's actually a moral hazard for banks to claim that we're FDIC insured, therefore what we do at the banks doesn't matter because, we've got this, this tax-funded entity that's going to back us up and bail us out at the end of the day. So the fact that they are on the hook for your money because otherwise, you've got lawsuits that can go after them, et cetera, and there is no state-run insurance backing it up, I would think that they'd run the business more cleanly than banks do. We won't dive into all the corruption around the banking industry, but there definitely does seem to be a moral hazard when you have that FDIC insurance backing them up and saying doesn't matter what you do, we've got it. But let's wrap up here. What's coming up after the break, Zach?
We are going to talk about China's digital inequality problem with the author of an interesting piece, David Morris, and we are going to dig into it a little bit. So stick with us. It's The Hash. We'll be back after a short pause. See you soon.
So on, I believe, Monday, we got some new insight into what is now a 9 or 10 month long crackdown on a variety of tech companies in China. And a report from the New York Times added some nuance to what we know. For those who haven't been following, we had the cancellation of the Ant Group IPO. Didi, choosing the ride-hailing company, was prevented from acquiring new customers for a period. And this new report cites some sources knowledgeable about the situation, saying that one of the priorities of this crackdown is to fight inequality. And the specific nuance here is that both Didi and Ant and a few other examples cited in the piece are digital platform companies, which essentially means they're two-sided markets that base their business model on gathering data about their customers. And those are actually subject to some scrutiny in the US right now as a category. And there's a lot of research from social scientists and economists arguing that some structural features of that kind of business drive inequality. So it's just an interesting sort of revelation about the focus and nature of China's crackdown. I also point out that there are some options for building similar businesses that don't have the same inequality effects using blockchain technology, but unfortunately, China has sort of begun to close the door on those options. Naomi, go for it.
I'm going to call bollocks on this one. I don't think this is about equality at all. This is about bringing down companies and individuals that are getting too strong. It's nothing about, we want to tamper, civil unrest. We want to combat, outright because we know that inequality leads to civil unrest, and we want everyone to all to be egalitarian. All these nice words. I don't think it's about that at all. They're specifically targeting people that are getting threatening to the government. I mean, China has shown that they have absolutely no qualms with combating civil unrest with brute force. They've proved that in Hong Kong. So it doesn't make any sense to me that they're like, this crackdown, it's just for equality and all of these nice words. Like if they wanted to combat civil unrest, there are plenty of ways that they already do that. They are targeting people who are expanding, interacting with the US stock market, places like Ant Group. These are people that they want to keep under their thumb. And I think it's all about control in this instance. But I'll throw to you, Ben.
I don't know. I don't think the two things are mutually exclusive, right? Like you can try to avoid civil unrest. There's my doorbell. You can try to avoid civil unrest and also crack down on it when it does occur, right? But from like an optics perspective, obviously Hong Kong wasn't a great look. Like Tiananmen Square, certainly not a great look. Like the government doesn't want to be known and make these sort of like human rights abuses that it engages in like quite obvious and apparent. And so I think, they can be doing
you got the
two things.
Ben.
I think so.
Like They're
I think
happy with those optics right now because they're not changing them. They're not doing anything to protect
that doesn't
all
mean they have to be
the
happy with them.
Muslims
It
in
doesn't mean
China.
it like cuts into their political capital in other ways, though they do have the economic capital to balance out with that. So I don't know. I'm not buying that those two things have to be at odds. At the same time, I do think that if control is at the heart of this, right, we're not going to see any real opening up. And I think, unfortunately, that kind of goes for most states writ large, right, David, when you're kind of laying out what these alternative scale platforms could be if you actually do want to try and fight some form of inequality based on centralized platforms. Once it gets out of the control of the state, I think the state becomes quite wary of it.
Yeah. I mean, I would agree that it's not necessarily either or. And just to cite one specific thing, these platform companies, for example, have very small staffs relative to their revenues, so that's less wages for people. And there's some specific examples of China being concerned about that. And the power issue, it is intertwined because the Communist Party is able to maintain control in China largely by continuing to increase people's standards of living, especially, people at the top and people who are educated who would be on the staffs of these companies. So I would tend to agree with Ben that they're closely intertwined, and it's hard to separate propaganda from the underlying motivations.
It's interesting to dive
Zack,
into what you mentioned about Web 3.0 and this decentralized internet, how this would be a way to break up power structures, but it's completely not accessible to Chinese people because of the control that the state party has on the internet in, blocking anything that might undermine them. So, what's the future for this? How do we get freedom for Chinese people? How do we get them to benefit from this amazing blossoming of decentralized tech that we're seeing across the rest of the world?
That is a good question. I do think it's going to be an interesting case because, we'll begin to see a tighter crackdown than we even have already in China first, and we'll get to see how people try and work around it. But that, I think, remains to be seen. Zack,
for this, I was just going to say, for this piece, did you look into the sentiment of the Chinese people? Do we know how Chinese citizens feel about this?
Yeah, that's a really good question. And unfortunately, for some of the same reasons that this is happening, it's a little bit harder to find that out. But it is something that, I didn't look into it, but I'm very curious.
Yeah, I'll also mention that the word equality is a very squirmy word because people use it to define all kinds of different things. You have equality of outcome, you have equality of opportunity. It's very clear that the Chinese government doesn't want equality of opportunity there. They're the government that's picking the winners and losers. They're the governments that's giving special deals to certain industries and certain people in that industry according to how close their CCP ties are. So it's very clear that equality in terms of opportunity is not part of what they're considering here. And in that respect, also, blockchain technology without the barriers to entry really is the great equalizer. It's that equality of opportunity that anyone can get into. So, I hope that the Chinese people start to get more access to all of that. That would be awesome to see. But Ben, I'm going to throw it to you, and we're going to talk about some mining.
Yeah, so a little bit of mining news today. So today, Compass Mining and Navier are rolling out a new tool called Hash Test that lets buyers and sellers sort of verify the advertised hash rate of an ASIC machine versus, how it's actually performing on a mining site. Now, this is interesting because that sort of data is not readily available. Mining companies have it, but they don't always sort of share it. And so for your retail miner who might be buying a machine and having it set up at a mining, a mining location, they could be told one thing and the hash rate could actually be less, which affects obviously sort of their earnings in some ways, but also just a whole variety of things. So this is a really interesting tool that, Compass and Navier are sort of doing in a very open and transparent and independent way to try and just give retail miners and sort of even a secondary market of ASICs more information about how these machines are actually working versus just how they're advertised and working. But Naomi, as a miner yourself, I want to kind of turn this over to you for your thoughts.
Mine. As a miner, I have a football mat. I don't have a mining machine. And it's summertime, so that thing hasn't been going
Naomi
for,
is our
for many
resident
months now.
sports fan and miner.
That's right. Definitely sports desk here. Yeah, it's interesting. It was maybe a couple of months ago, I read a really interesting thread. I think it was on Zuko Wilcox's Twitter page where they were diving into the specifics of like this underground world of mining and about how nothing is really clear and how there's a lot of sabotage against different groups. And there's sort of, there's coercion in there. There's, enforced monopolies with like using coercion with certain companies, sabotaging competitors and all that. Like it's kind of this very interesting world that I'm not at all involved in, apart from my foot warmer in the corner of my room, right? But it is fascinating because, like, if you ask the average person, who's getting into this, they're going to buy a machine. They think that what's on the packet is what they're getting. Most people in the mining world, they know exactly what their machines are capable of. They can reroute all kinds of things to increase input. Like, the mining machines are a lot more malleable than people realize, and you can divert resource to all kind of different areas. It's just like this fascinating world that I'm only starting to dig into. I wish we had Will here to kind of dig into the mining side, being from Compass. But Zach, I'm going to throw to you. What are your thoughts on all of this?
It's sort of like the picks and shovels play of the picks and shovels sector, right? So you have these companies who are helping people optimize their mining operations. And I think this is a great tool. It should be accessible to folks, right? You want to know that you're getting what is advertised. And at its root, that's what this is. My understanding is that there's a lot of like back and forth of, selling sort of older models. There's a fairly high turnover in some of these high volume mining operations in terms of getting the latest machines. So there's a lot of, pre-owned machines kind of hitting the market. So the ability for people to have a tool that can kind of check to make sure everything's still functional is great, and should serve Bitcoin miners, both small and large. And again, this happens in the context of the hash rate migration heading out of China and into other markets, potentially machines hitting the market en masse relating to that crackdown. So the idea that this can help avoid fraud and foster honest dealing is super relevant, I think, especially in this time.
Can I ask a quick question, and then Ben can take it? So what I'm not clear on, does this remotely monitor a machine that's already operating that is the equivalent of something that you're going to buy? Is that how it kind of checks? Or can I guess, Ben, can you just kind of describe in more detail whatever we know?
Yeah, so there are a couple different things that go into it. Basically, there's a stratum URL that you get when a miner connects to a pool, and this thing kind of does a similar stratum URL to, or the hash test gives you that for the miner itself. So when it gets plugged in, you're starting to see how it behaves versus how it's initially, before it gets plugged in, like it's being advertised.
So you're monitoring your own machine. Okay, got it.
Yes, you're monitoring your own machine here, and that's really important because that also, if like you want to potentially resell it in a secondary market later, you could, demonstrate to the seller it actually functions. And I'm starting to dive a little bit deeper into the mining operations and how those exactly work. And Naomi, to your kind of statements, it gets really gray really quickly. There's a huge, a weird secondary market where sometimes miners are sold with scratched off serial numbers and stuff like that. And so it becomes a little bit dodgy. And this hopefully, and because sort of the information about performance is a little bit proprietary and companies aren't super open about that, this is a tool that can hopefully help to break down those barriers. Because I think, as we're seeing around like the climate debate with mining too, right? Like more data is better in a lot of senses here. We just need this information in a lot of cases. And so this is kind of one step towards that. And, as I say in the piece, you can kind of think about it in some ways as like the Carfax of mining, right? Like you're just trying to answer this age-old conundrum between buyers and sellers of like, is what I'm getting actually work, and how is it vetted? How can I see that? So it's a small tool, but I think it's one of these incremental professionalizations of the industry that could be really useful. But Naomi, I'll toss back to you.
Yeah, just to wrap up, I found the article I was referring to, The State of Cryptocurrency Mining. It's from a SIA blog, actually. They're talking about, Equihash, saying the manipulations you need to make to the data are simple enough. You can just merge memory and computation together. Like, it basically outlines all of these quick fixes that, people who think that they're buying a mining equipment or if they're doing something that's ASIC resistant, it turns out that a lot of miners are able to be manipulated, that, you can get around all of that stuff. It's just a super interesting world. So I'm excited to read more about what you're diving into there, Ben.
No, absolutely. And so, Jen, take it away.
We're moving on. Okay, Tom Brady is back in the news, and this time his NFT platform Autograph has announced a few partnerships. So they are partnering with Lionsgate and DraftKings and have exclusive multi-year NFT deals with Tiger Woods, Wayne Gretzky, Derek Jeter, Naomi Osaka, and Tony Hawk. So a lot of big partnerships. The platform is launching in summer this year. David, I'm going to kick this down to you. We have so many NFT marketplaces right now. There's dozens and dozens. We hear about them all the time. Tom Brady is launching his in the summer. What do you think the future looks like for NFTs? Are we going to have an aggregate platform that just pulls everything together under one roof? Or are we going to have to where are we going to have hundreds of platforms that we have to go off to get our entertainment and our sports and our art collectible NFTs?
Well, funny you should mention that, because I thought the most interesting part of this, and I read it a little bit quickly before the show, but DraftKings, if I understand, is actually going to be launching its own NFT sales platform as a part of this, or has one already that I wasn't aware of. That to me seems like the most interesting part of this, because if you're not familiar, DraftKings is a sports betting app. I believe they've had some regulatory issues in the United States over the last couple of years, but they are still really big. And we've already seen the success of Top Shot on like attracting sports fans to these collectibles. It really has already been proven. And so I see this as a potentially really big win, because DraftKings already has a huge audience. Obviously, the name of a famous football player is great, but it also just seems fundamentally to be something that has already been proven out. And so I think this is gonna be a big one a couple years from now. But I'm curious. Zack is smirking as if he disagrees.
David, have you changed your tune on Tom Brady?
I was remembering the time that David said that it's a guy who throws a football and it's a model.
Exactly.
It was like Tom Brady and Giselle bought a slice of FTX.
I'm saying Tom Brady is the least interesting part of this too. So I'm not changing my tune.
Okay.
He didn't even use his name though. He did say there's a football player attached, which is nice.
Yeah, I was just remembering that time. Yeah, I don't know. I mean, Jen, I think to your question, that's like a really good question, right? Like, is this going to be a fragmented market, or is this going to be a concentrated market? And if you asked Andreessen Horowitz, they would say, oh yeah, it's definitely going to be concentrated on OpenSea, because we just invested a boatload of money to make them that centralized repository of all these many sort of like NFT projects circulating in the universe of NFT projects. I think there is something to be said though for that specialization, right? Maybe it's social NFTs that you want to do, maybe it's sports NFTs that you want to do. I think there is sort of a multi, I don't know what the equivalent would be, like a multi-chain future of NFT marketplaces where these things sort of exist, probably like where the audience is, right? And I think that's probably the interesting thing that David is highlighting with DraftKings, right? This can exist where there is already a large audience that already cares about this one thing and this one thing alone. And if you can sort of bake NFTs into that pie, then all of a sudden, it does get kind of interesting. And I'm going to be really curious to see if any of those really stick, or if it's going to be these, these other big players who are raising large sums at this point in time, who really do capture and become the dominant force in this industry. So yeah, we'll see. Tom Brady, man, he keeps doing it. He I guess he delivered in some capacity on this autograph thing. So cool to see it, and we'll see what happens with it.
I'm most interested about the Lionsgate. Sorry, I totally jumped in. If Ben wants to jump in, please feel free.
Do it, Naomi.
Dirty dancing. Dirty dancing.
Yeah, I'm. So I am most interested in the Lionsgate aspect of this. I love the idea that we're moving towards more interactive media, that people may be able to affect the outcomes of their favorite shows. Like, we've always wanted to participate in this sort of thing. Like, we love anytime these like giant media companies launch some sort of marketing campaign where they're like, oh, we have a Twitter account for our character, or we have something else. Like, people love that stuff and they jump on it. And I love that NFTs may be a way for people to kind of, somehow interact with or affect what's going on in the world of their favorite dramas or whatever. I want to know how like Dirty Dancing factors into this. Obviously, one of my favorite movies being a female. So it's very, very exciting. Jen, I'm going to throw to you about your thoughts on this.
I'm just going to add a quick comment, and I'll throw it off to Ben. I also think that fans want to interact with entertainment and movies. And I was debating this with a friend, and they brought up Bandersnatch, Netflix's interactive Black Mirror episode that was a huge failure. So I think people want this. Netflix tried it. Maybe they were before their time. So let's see. Maybe NFTs can change the way fans interact with their content.
Yeah. They're not done with it. They just hired a gaming executive, so they're looking at that space in an interesting way. That being said, I mean, I think this is kind of a shrewd move, to be honest. Like, I think attaching all these huge names to it, bringing in DraftKings, which has an audience already, and then also looking at Lionsgate, which has IP like Mad Men and other stuff like that. I think it's really just like meeting people where they are and meeting these audiences where they're already going to kind of be occupied, or sucking in people who are like huge fans of Mad Men, for example. So it's a really interesting diversification. Like, I wouldn't have put these two entities together, like DraftKings and Lionsgate. But I think it's a pretty shrewd move for Brady if he's going to try and make this thing work.
Only Tom Brady could do it.
Man.
Tom Brady, he was doing some good jokes. He was you got it.
One really quick note about NFTs and interactivity. Most people don't seem to be aware of this, but NFTs do have some programmability and can do some interesting stuff other than just be JPEGs. So maybe the Lionsgate and interactivity angle will help us dig deeper into that.
Naomi, we need to come up with like a shorthand, like the painted keys hypothesis, the Adam Levine, the painted keys. You know, these can be more than painted keys. They can do stuff. They can open things. Mm-hmm. Anyway, we'll get to that another day. We're gonna wrap painted it up right here. Painted robots on the internet.
White paper coming soon.
We'll workshop this offline.
Yes. I like where this is heading. All right, cool. Thanks. This has been the Hash for Wednesday, July 21st. It's the summertime. It's hot. You guys stay cool out there. I'm Zack. It's Naomi. It's Ben. It's Jen. It's David. We'll be back tomorrow to talk about more stuff, and it's gonna be fun.
And aren't we gonna have SBF on First Mover tomorrow? Am I wrong on that?
Love SBF.
Wait a minute. Yes, we're going to have Sam Bankman-Fried fresh off raising the biggest round in crypto history. He's going to be on CoinDesk TV at 9 a.m. tomorrow on First Mover, so please tune into that as well. Thank you, Ben. You're really picking me up. I appreciate that.
No worries.
Bye. Let's take it home. Bye,
Peace.
folks.
Take it home.
Thanks,
See ya.
Bye, guys.